I founded chartingwealth.com to demystify the market. You see, the news media exists, the entire financial overlay on the economy exists to make the stock market complicated. It does not have to be. And in fact, technology has allowed us today to be able to track the market dollar for dollar, penny for penny, almost instantly. And the beautiful thing about that is, particularly when we look at the charts that we use, is our ability to use the weekly chart, the 2-day chart, and the 4-hour chart to chart what's going on and define big trends. Now, you hear quant trading, dark pools, you hear all the things that allow people to instantaneously trade, to maybe bid up the price a little bit on you, keep you from entering at the best spot. That is something day traders can suffer from. And of course, it can affect things overall in the market. But when you look at the charts that we use, and I'm showing on screen for those who are watching video, if you're listening, I'll tell you what we're seeing. We can see on our weekly chart where the S&P 500 rolled over going up back at the beginning of June of 2018. And it went up after we had the rollover. Went up, down a little bit, never crossed over, so we would have stayed in and continued on up. And again, that's on just the weekly chart. On up significantly until it topped out right there around, well, it actually topped out in mid to late September. And then, of course, rolled over and started hammering down. And what's so beautiful is when it did roll over and started hammering down, it hammered down on the chart all the way to a bottom in right there on the end of the year, January 28, 2018. And then after some time bumbling around, started moving up, and we had a crossover going up quite nicely there around the end of January of this year, and it's been just moving up except for a couple of weeks of some pullbacks since then. And it's just been beautiful. And the thing that's so beautiful about our charts with the up movement and the rollovers, particularly when you combine them, and again, we don't use the weekly as just a single one-off chart. We use the weekly along with the 2-day and the 4-hour to help us find jumping in points and jumping out points along the way, so that we're able to ride the ebbs and flows of what the market's doing. The weekly tells us if there is a confirmed downtrend in the market or if there's a confirmed uptrend in the market and when they occur and take place. And that allows us to be able to see what goes on. Now, who wants you to know this? Really, not a lot of people. They don't really necessarily want you to know what's really going on in the market, because when you see it, you see it. You know what the hell is going on, as opposed to being in the dark, as opposed to being mystified, as opposed to having to have truth tellers, fortune tellers, magicians tell you what's actually happening when maybe they're really not telling you what's going on. So what we're all about at Charting Wealth is empowering you to see what's really happening. And you don't ever hear me talk about the news, do you? I don't. And I came up with this adage just a couple of weeks back: follow the charts and then fill in the news later, because the charts tell you what's really going on. That's what we're all about. That's why you need to stay with us. 10 minutes a day, every day is all you can ask. I probably already used up 3 minutes of it, but it's important. It's important that you know reality, because reality, it's what's going to help you make money in the market when you get good at this. We're not a stock calling service. We're an education firm. We want you to train and learn with us, and then you can go do whatever you want to do with your money. You can take it and go to Vegas and blow it. You can spend it on drugs. You can just fritter it away, or you can be smart. You can know what's going on, live in reality, know what's real, not be fooled by the magicians, not be fooled by the illusionists, see what's really happening. That's what we're all about. Let's jump into this market. What do we see going on? S&P 500 up for the day a little bit, 0.08%, starting the week off with a nice strong up candle, price movement above that weekly trend line. Derivative oscillators about flat. Now, this is just the first day of the latest 5-day candle. We look at the 2-day candle again, not moving up at quite the rate it had been, but again, it's only the first day of the latest 2-day candle. We'll see how Tuesday wraps that candle up, but price movement has moved above where it was that prior Friday. Derivative oscillator still heading up, not quite as strong. I'm sorry, price percent oscillator not quite as strong. Derivative oscillator gaining nice upward momentum. Go from the 2-day to the 4-hour. Price movement's well above that 2-day trend line. And again, are things topping out? They're barely moving up over the course of the day, down a little in the morning, up a little in the afternoon. Price percent oscillator is trying to continue to move up. Derivative oscillator losing momentum. So keep your eye on the price, see what's going on. Of course, we're waiting for a pullback so we can jump into the S&P 500 up move. So it wouldn't be bad if it rolled over a little bit. Haven't had a jumping in point yet. So we'll leave the S&P 500 and go to the Qs, where of course we have had a jumping in point. We'll talk about that in just a minute. It's also primed for up movement, and we see it up a fair bit more than the S&P 500. Qs up, the NASDAQ 100, 0.25% for the day. Derivative oscillator gaining upward momentum. Price percent oscillator still moving up nicely. Go from the weekly to the 2-day, and again losing a little bit of that momentum, but still heading up. Price percent oscillator heading up. Derivative oscillator gaining upward momentum. And again, we look closely, and yes, price is closing. First day of this latest 2-day candle, which will close on Tuesday at the end of the day, moving up nicely. Price well above the weekly, well above the 2-day. We go to the 4-hour, and of course, remember we had that crossover back last Monday, and we had a nice jumping in point Monday afternoon, right around the noon hour. Things have moved up nicely. Continue to keep an eye on things. Price percent oscillator still heading up. Derivative oscillator losing momentum. So keep your eye on things. Again, price well above the 2-day, well above the weekly trend line. So that Qs trade is going quite nicely. Keep your eye on it. If you are in it, hopefully you are, and we're paying attention, and we're waiting and jumped into that because, again, it has been moving quite nicely for us. We're going from the Qs now, leaving stocks, going to 20-year bonds. Started off the week down 0.35%. Remember, we had 2 big, strong up weeks in bonds back on the week ending the 22nd of March and the week ending the 29th of March, pairing off weakness the week ending the 5th of April. And then, of course, this week starting off with a red down candle. So we'll just see, has actually moved through not only the 2-day, but the weekly. It's just the first day of a 2-day candle. Derivative oscillator still positive. Price percent oscillator still positive, but heading down. We go from the weekly to the 2-day. What do we see there? We continue to see a blowing off of steam. Now, are things bottoming? You know, it's not moving below about the 123.50 mark or so. So again, pay attention. The price percent oscillator is heading down toward the red signal line. Derivative oscillator losing momentum. So we'll continue to watch, see what we see. Again, still positive on both. We haven't had a crossover yet on both the weekly and the 2-day. We look at the 4-hour chart, and we see that it's, again, bottoming out right around that 123.50 mark so far. Is it going to bounce off that and start moving up? Don't know. Derivative oscillators losing downward momentum, but that price percent oscillator is still heading down. If you're interested in maybe jumping into an up play on bonds, if they do move up before there's a crossover on that 2-day chart, if all of a sudden you see that 4-hour chart on Tuesday morning or afternoon or even Wednesday morning start bouncing off somewhere around the 123.50 mark and moving up, and you see a crossover on the 4-hour chart, you might consider jumping into an up trade. It may happen, it may not. If it does, just be primed and ready for it to do a practice trade. Now, let's leave bonds and go to gold. Gold, of course, a vertical crossover back on the week ending the 29th of March. Had a nice down week over the course of the prior week with a strong red down candle with a wick on the bottom, no wick on top, looking quite nice. And again, we go from that to the 2-day chart. Well, let me first off comment how we started the week out. Started the week out with a green spinning top, almost a doji. Again, meaning indecision tending up. Yeah, it's a spinning top. Derivative oscillator still gaining downward momentum. Price percent oscillator still heading down. Go to the 2-day chart. What do we see there? First day of the latest 2-day candle. What's gold doing? What have we been telling you to watch for? Gold bouncing off. And again, that 121 mark or so just doesn't want to penetrate that, does it? It's done it 3 times now. We see gold bouncing off that 200-period moving average line. It's doing it again. Doesn't want to penetrate that. We told you to watch for it. This is the first day of the latest 2-day candle, a strong green up candle, gold up 0.43%, not quite 0.5%. Price percent oscillator's gone flat, derivative oscillator losing momentum. And then we tune into that 4-hour chart. What do we see? Gold bounding up strong in the morning after a day and a half of prior up movement starting on Thursday afternoon, Friday, and then of course really bounding up Monday morning, pushing through the 2-day trend line, crossing over in the morning, and again pairing off a little bit in the afternoon. So for those of you who jumped into gold when it started making that down move after you had that weekly vertical crossover, do be careful. And in fact, I'm going back too far. I'm going back before the weekly vertical crossover. After the weekly vertical crossover occurred, do be careful as gold is bounding up. We've been warning that we saw that really strong floor at 121, and it appears to be bounding off of that. So do keep that in mind and be careful. Floors are interesting things to find because they can give you opportunities to see where things might stop, or as we've said also, if gold, when it does finally move through that, if indeed it does, that is of course going to be a situation where gold is probably going to keep moving down quite strongly. But again, some forces out there holding gold up on that 2-day chart, as we can see, and as we've talked about, on that 200-period moving average line at about the 121 mark. Very, very strong. Folks, that's where we are as we end the day on Monday. Get ready to go into Tuesday, the 9th of April. If you've not purchased our book, we just mailed out a lot of them. We're actually now going into our 9th printing of the book. If you live overseas and you want to buy our book, what I need you to do is email us, cw@chartingwealth.com. I'm afraid you can't buy it from the link in the show notes. For some reason, Squared doesn't allow us to actually ship overseas, but we will send you a PayPal invoice. You pay that, we'll send your book right out to you. Got books going out all over the world. Happy to send you one. If you're listening in the States, want to buy the book, look at the link in the show notes and just follow it. You can purchase the book. We'll get it out to you. We also have Traders Journals available. And again, if you want to be a Patreon supporter, all sorts of great things there. You know, we offer all sorts of wonderful trainings on short chart trading, Bitcoin chart that we have and how to use that to track Bitcoin. If you're interested in the quarterly chart, long-term investing, we've got interesting information to share with you on the quarterly chart on the S&P 500. And again, all sorts of great stuff to help you with. We appreciate you being there, appreciate your support. If you have questions, problems, concerns, again, the email address, cw@chartingwealth.com. It's our initials, Charting Wealth, cw@chartingwealth.com. And again, God bless my friends. All the best from the whole team here at Charting Wealth World Headquarters.